Ladies and gentlemen, boys and girls, we're going live here with Peter McGuire in 60 seconds. Peter McGuire, welcome back to XM.com. This is another Around the Market XM.com special. We've got the CEO, XM.com Australia, online now to talk about currencies, what's moving markets, and the signals that you all should be trading. Welcome, Pete.
Good morning, Will. How are you?
Mate, I'm here. We've had an electric week of data. We have another electric week of data coming up, and I want to hear all about it from your desk. What's moving, what's shaking, and what are my trading signals, Pete?
Well, I think what we've got to put our mind to, Will, there was a chance that we could have seen the Kiwis, as far as the Reserve Bank, pull back their taper and, of course, ratchet up rates. So there was the talk line. It didn't eventuate because of the lockdown issue. So I think it scattered the markets and sent a few reverberations of shock across certainly the Tasman and certainly on global currency markets. It's been a big week geopolitically. We're not here to make reference to it. Everyone knows what's going on. And more importantly, we've got a large amount of data coming out as far as Eurozone, what's happening with the Aussie dollar, what's happening with British pound, and that strengthening, let me say, King dollar, Will. It's back at 93.55, the US dollar index. Huge move to the upside.
Huge move to the upside, and the contrast with that, with the anchor around the neck of the Aussie. You know, we're dropping now closer to 70. Some are calling out that we may hit a 70 handle, and we'll come back to that. But on screen right now, what we have is a chart talking about asking the question: has the US already recovered?
Well, you've got to think unemployment numbers are really very, very strong. So there's the first part of the journey. Secondly, they've got a very aggressive inflation. The third part is sales are up, equity markets, you've got, all of them are nearly record territory, as we've made reference to each week, nearly at record territory each week. So the overall themes are very, very strong, and that's demonstrated by that recovery. Europe is lagging compared to the US, and it's a different engine. I mean, the way that's going, that's a big Corvette screaming down a roadway on the back blocks of Phoenix, Arizona, at about 150 mile an hour, the blue one. And the gold one maybe is a Porsche, but they've filled it full of kerosene, and it needs to empty the tank and put some petrol, some real high octane petrol in it, Will.
Look, irrespective, I mean, the reality is that whether it's the US or Europe, it's still tracking pretty well, right? They both they're both showing V-shaped recovery, and they're trending in a positive direction. So look, you know what? I find it a bit rude that they're saying that the Eurozone's so far away. I mean, in the end, it's just marrying the trade there, right?
Well, it's always been a little bit slower compared to the US, but really it just demonstrates that it is further behind, and it's got further to make up. And I'm not saying that won't happen, because one thing for sure, as we know, Will, they're going to be embracing zero interest rates for far longer than what the West will do in the sense of the US. So absolutely. I think that could be their competitive advantage over the next matter of years. Absolutely.
Well, look, we're looking for those electric data signals that are actually going to drive a trade. And so we've talked currency a little. We're talking a bit about property. We're talking a bit about inflation. Tell me about the inflation trade right now, and how it actually can kind of feed into our next chart up here, which is really the PMIs that are kind of supporting the reopening, if you like, but kind of calling out that Delta and China are still exposing us to some risk.
Yeah, exactly right. And if you run across those PMIs, that really tells us everything. That's something that I think all traders need to be mindful of. Your services PMIs, your manufacturing PMIs for different regions all over the world, Will. And that's something that I think the man on the street, the woman on the street that trades is not an economist. They may be, but I'm suggesting that they may not be. And they in turn need to do their own readings and reference points about a couple of key aspects: unemployment, PMIs, what's happening with inflation, their central bank's policy, all of those. If you're going to trade a currency, know what the key frameworks are about that currency, and what are the inputs to give you an output, which is where does the currency trade in a cross trade. So against, say, Swiss against the Aussie, or the Japanese yen against the pound, or against naturally King dollar, everything against US dollar. So that really demonstrates that. And the COVID story, well, it just seems to be, depends on what lens you're looking through, what your viewpoints on COVID are.
Well, that's a fair comment, mate. But one by one, I think every chart we look at is telling a bit of a story,
yes,
and this one clearly is shaping the story. And irrespective of who you are and what your view is on COVID, the outcome's still the same. What is the data that you're trading today? How are you driving
decision-making
process? And I think if one by one each chart is telling us the same story, the question becomes what's setting off the alarms and what's really shaping the way we think about next week, for example.
Well, that's right. I mean, we've been talking over the last couple of weeks together about that continuing uptick as far as US dollar. We've got next week's a big boomer of a week. And we're not going to make reference to it today too much, but Jackson Hole. So what happens there as far as the Fed's concerns? And we've got, make no bones about it, we're now under 117 for euro US dollar. We're at now approaching 110 yen for US dollar. We're now at 136 for pound US dollar. We're nearly at that. We're over 128.20 for Canadian dollar. Aussie dollar 71.5. As you made reference, well, it was only 6 months ago, it was nearly 80. And you got the Kiwi dollar spanked down at 68.27 because they wouldn't ratchet rates up and due to a COVID lockdown. So that demonstrates the true storyline. Gold 1782 and crude oil, who would have believed it, but nearly in bear market territory with a 20% retracement over the last, 3 weeks.
Bond markets, currency, King dollar. Pete, what are we thinking? What are we doing? And how are we setting for the weekend ahead of a big week coming next week?
I think keep an eye on that US dollar, Will. What's happening? We've had a sell-off as far as equities, a little bit of a sell-off, and that continuing uptick as far as strengthening US dollar. That's something I want to keep an eye on. What's happening with crude? Will that continuation downdraft pull crude even softer as it approaches nearly $60 handle and 65 for Brent? And what the storyline is going to be as far as the equity markets over the next matter of days, leading up to, of course, the Fed rhetoric coming out of Jackson Hole. That wraps it, and that's nearly the point of what I'm looking at and what traders.
Well, that's the show, Pete. That's the show right there. And coming into a weekend now, we're not going to leave it so long next time. We're going to talk to you earlier in the week ahead of Jackson Hole, or even perhaps on the day of Jackson Hole. I think, Pete, to shine a bit of light and review the situation and provide some commentary around the market.
That'd be lovely, Will. Maybe I'll borrow your jet, the Gulfstream, and head on over.
Now, listen, I can't afford the fuel bill though, mate, so you might not get too far.
All right, well, that's good.
All right, guys, that's a wrap. Speak soon.
Thank you, Will.